Hi there, welcome to the Cryptocurrencies and NFTs module. My name is Ash from Wise Up Financial Education, and I'll be your host for this presentation. In this presentation, I aim to give you the basic understanding of what cryptocurrencies are and NFTs as well, so you can go and find out more to research into the future. Have you heard of crypto? Let's start with that. Let's start with a little bit of a game. Can you guess what these logos represent? Let's start with an easy one first. Yes, you probably guessed it. It's Bitcoin. As I show more figures and logos just like this, please guess along with me and I'll reveal the answers in just a second. This one over here is Ethereum. The next one is Litecoin. These three are the most popular cryptocurrencies out on the market right now. All of the other pictures I'll show here are also the most popular cryptocurrencies, but these three top the markets. Next one here, this is Polkadot. One after, you've probably seen this, it's called Polygon. This one over here is called Cardano. This is another one, it's called Solana. And finally, we've got Tether. Now, why did I ask you to guess along with these ones? As I mentioned, these are the most popular cryptocurrencies out in the market right now. So one is to give you an understanding of the different types of cryptos that exist. And secondly, more importantly, if you did not guess these, or if you weren't able to guess all of these, then it's to show you that you need to do some more research before you ever think about potentially investing or getting into the world of cryptocurrencies. So hopefully this has given you a bit of a flavor of what's to come. But here's what we'll actually cover today. First of all, what is crypto? We'll answer that question, then we'll talk about how crypto works, and then we'll go into why there are so many cryptocurrencies out in the market right now. And as we pace more into the future, we'll start looking into what the utilities for cryptocurrencies are, some of the risks and benefits of it, and I'll introduce NFTs. And don't worry if you don't know, and if you haven't heard about NFTs, I'll explain everything in detail there. Before we finish off, we'll talk about some top tips and the future of NFTs and cryptocurrencies. The way we can introduce it the easiest is by talking about what a cryptocurrency is. So the best way to do it is through a timeline of evolution of money. I think that's the easiest way to kind of explain this. So if you haven't heard about cryptocurrencies already, it's a type of currency, just like what we know and use currently. So we're all familiar with the pounds, the notes, the coins, the physical asset of cash, right? If you think about it, the reason why we think a £5 note is worth £5 or a £20 note is worth £20 is because enough people have agreed that to be the case, right? The actual paper or the plastic that it's printed on, or in the case of coins, the actual metal, is probably not worth that much. Because there's millions of these notes and coins in circulation, each individual bit of paper that's a £5 note, let's say, is actually not worth £5, right? It's probably worth more like a penny. However, because it has £5 written on it, £10, £20, whatever written on it, and enough people agree that that's the worth, that's the value of that note, that piece of paper, we all agree that to be the case. So it becomes real. Nowadays, we don't really use cash that much, right? What we do instead is enter the digital world of payments. And this is just through having a bank account where all of your money is just numbers on a screen. And transactions are through your card or your phone and smartwatches, whatever else, and you just tap to pay. And what happens is you basically see the money change on your bank account screen. So you no longer exchange physical assets of cash, but you still believe that the number being represented on the screen is representative of how much money you have. So if we follow along the same trend, the next stage of evolution is inevitably a purely digital currency. And that is where cryptocurrency comes in. There are people still trying to believe in the existence of a purely digital currency. And I'll explain the difference in a second between traditional currencies and cryptocurrencies. But for now, hopefully you understand that it's an evolutionary stage into how cryptocurrencies have come about. Okay, so let's talk about the difference. How does it actually work in real life? way to do it is to compare with traditional assets that we know and understand. So here are some examples of currencies that we all know. On the left there is the British pound, in the middle is the US dollars, and on the right there is euros. All cash assets that are different currencies that we're all familiar with. They work in different areas, they're all worth different amounts. Right? You all see in the foreign exchange, the currency exchange, they're all worth different amounts. Similarly, we have different cryptocurrencies. We've got Bitcoin on the left, Ethereum in the middle, and Litecoin on the right. The difference is on the left side, the traditional side, we have everything that's physical assets, right? Physical cash coins. And on the right side, these coins are just representative of the currency. There is no physical asset. It's just purely digital. But there's still different types of currencies. While in the traditional world, there are many other currencies, usually one per country. Some countries share the same currency. On the right side there, in the cryptocurrency world, there are more than 8,000 different currencies and probably still growing. Okay, and I'll explain why that is and how that can happen in a second. But hopefully you see now the complexity, the difference between the traditional world and the cryptocurrency world. In the traditional world, we have banks, right? So they keep it controlled. The government and the banks keep the number of currencies in check and the value of currency and the way it gets used in check as well. So all of the transactions that you make between the different banks happen and they can track it, and it's controlled and it's regulated and it's protected. However, these transactions are not necessarily stored in a central location. So let me explain what that means. If you had a bank account with NatWest, with TSB, and HSBC, 3 different bank accounts, you can make a transaction with your NatWest account. You can pay for something. The amount of money that you've got in a NatWest account will change, not the TSB and HSBC, but TSB and HSBC also will not know that you have made this transaction, right? The only way to track the transaction that's happened in your NatWest account is through going through the NatWest account that you own. Okay, that's the main difference. So you've got 3 different bank accounts. One of them makes a transaction. You can only track it through that transaction. If we look at it in the cryptocurrency world, there are different equivalent of banks, which are called exchanges. For example, Coinbase, Kraken, and Crypto.com. And these all allow you to trade cryptocurrencies. However, there's no centralization and it's not regulated, i.e., there's no control over how many different exchanges that exists, how much money you can put in, how much you can trade, etc., etc. And there's no regulation from the banks or the governments. So your money is not protected. And the key difference on transactions is that all transactions you make are in fact stored in a single ledger on the blockchain. I'll explain what blockchain is a bit later on in the presentation, but right now, all you need to understand, it's a way to store data. Okay, and a ledger is nothing but, imagine a book of records, okay, just of all transactions. That's all you need to think about it. It's the easiest way to explain how transactions are all recorded. So every single transaction that anyone's ever made in cryptocurrency world will be recorded on a single ledger. That is the primary differentiator. There are different safety levels that exist in order to anonymize your records so your information doesn't get leaked, but that's a whole different aspect. But hopefully you understand now that the crypto world is a lot more complex than the traditional banking world, and it's not regulated. Now, what happens when you need to increase the supply in the traditional world? You can just make more money. So as you've seen in the last couple of years, the banks have been printing a lot more money to increase the supply and circulation of the amount of notes and coins that go around. In the crypto world, however, that's not so easy. In order to have more coins in circulation of the same existing cryptocurrencies, there's a whole complex software that needs to be run. And the way to do it is called mining. It's not called printing, it's called mining because you mine the different types of coins that exist. But the complexity, let me illustrate it with an example. In order to mine more Bitcoin, you need to almost have an equivalent energy supply of a small power station. Okay. And On top of that, the amount of energy that it uses to mine Bitcoin, you can probably power a whole electric car to drive around the world a couple of times. So hopefully it gives you an idea of how much energy it takes to mine some of these cryptocurrencies. Not all of them, but some of the more well-known ones. And that's because it just is so complex to get all the software behind it to work. So it's not as easy as you can just to print money. So why are there so many cryptocurrencies that exist in the world? As I mentioned, it's not regulated. So nobody is telling anyone how many cryptocurrencies can exist. And the reality is anyone can create a coin. Okay, if you understand the software behind it, to create a coin is quite easy. However, to bring the coin up to any value, what I said earlier is all about the amount of people that believe in it, right? The amount of support that coin gets. So it's all about the demand and supply rules that will actually value the coin that you have. So if there's a lot of demand for the type of coin that you've made, then that coin will become more valuable because more people want it. So the price of it can go up. But if there's too much supply and not enough people who want it, then it's not going to be worth that much. So the better you can be at marketing the coin, or the better anyone who creates a coin can be at marketing, the more value that coin will actually have. So the more influence you can amass, the better your chances are of valuing your coin highly. So crypto trading has primarily got the most influence over the value right now because there's no actual buying and selling power of cryptocurrencies. So all you can do is buy and trade the coins or the currencies online. So it just means that if enough people want to buy a certain type of Bitcoin or Ethereum or Litecoin or any other cryptocurrency, that can have more value. And that's why you see this massive fluctuations in the graphs that you can see in the background of that picture and also in real life. And that's why most cryptocurrencies are actually worthless, because there's no real utility, or very, very few of them have real world utility other than trading. And so few of them have real world support. Most of them just come in and go without ever even becoming worth £1. But let's illustrate how volatile it can be through a little activity. Okay, this is probably going to reflect a bit more of the real life scenarios that can happen, but of course it's a simulation. So what I want you to do now is to grab a pen and paper and a phone or anywhere else that you can take notes in, and a calculator, because you'll need to calculate some of the things that we'll be going through right now. Okay, it's a bit of an activity. And of course, because you're watching it on video, you can pause it. And I'll tell you when to pause it so you can calculate everything as we go on. So the way this activity will work is like this. You have £100 to buy crypto. Okay, and on the right side there, you will see the different types of cryptos that exist. So there's Bitcoin, Ethereum, Solana, Cardano, and Dogecoin. They're all worth different amounts. And so you can buy £100 worth of them. You don't have to just buy one whole one. You can buy portions of them. But I'd just say, for the sake of the activity, use it in a way that is easy for you to calculate. So you can, of course, buy, with your £100, you can buy one Cardano and 5 Dogecoins if you want, but the calculations will just become a little bit harder. Or you can buy one type of the same thing. So you can buy one Solana for your £100 because it's worth £100, or you can buy 2 Cardano, right? Or you can buy 1/3 of Ethereum, as an example. Because Ethereum is worth £300, you don't have £300, you can only buy £100 worth of it, so you can have 1/3 of Ethereum. Okay, so hopefully this makes all sense to you. So when you're ready, pause the video and pick your choice of how you want to go with allocating your £100. And the way the activity will go is I'll show you different events that happen that will affect the rates of the coins that you've chosen. And at the end, we'll figure out how much money you have left over. Okay, I'm giving you £100. Pause the video, choose your currency, and let's go. So, newsflash. Ethereum has just been approved to buy things digitally. And so on the right side, you see now how the changes have happened, okay? Ethereum has just gone up in value, indicated by the green arrow upwards, because it's worth more. People want it because you can buy things digitally with Ethereum now. So it's worth 600, but Bitcoin has gone down. And Solana, Cardano, and Dogecoin all have gone down a little bit. So now you have a choice to make. What are you going to do with the amount of money that you've invested in the coins? You can choose to hold on to what you've got. You can choose to sell what you've got and then buy different ones, right? You have the choice now. So pause the video, choose what you want to do, write down the value of your current existing currency. Okay, so for example, if I had bought a third of Ethereum and it's now gone up, I could sell my third of Ethereum because it will have gone up in value, and I can buy something else that's cheaper if I wanted, right? Or for example, if I had bought 2 Cardano and that was at £50, so I had £100 worth to spend. I have 2 Cardano. Now here, Cardano's just gone down, so my £100 is worth £80. Okay, so I could sell it at £80 and then buy some more Dogecoin or buy 1 Solana, but it's up to you. Figure out what you want to do. Pause the video. When you're ready, let's move forward. Another news flash has happened. Now, the new NFT platforms are being built using Solana and Cardano. So the world of cryptocurrencies are going up. We've got almost all the other coins going up except for Dogecoin, which is going down. Okay, so again, pause the video, figure out what you want to do. Do you want to hold what you have? Do you want to sell it, buy new ones? Figure it out. Pause the video, make your decision. When you're ready, let's move forward. Now Solana has been continued to be pumped up. People are buying Solana more and more. There's more demand for it. The amount of money Solana is worth is going up again. What are you going to do? Again, the changes of the different cryptocurrencies are on the right. Pause the video, make a decision. Let's move forward. Now, Cardano has introduced blockchain utility in supermarkets. So the value of Cardano has just gone up, and other things have been influenced as well because of that. What are you going to do? Pause the video, write it down, make a decision. When you're ready, let's move forward. Okay, Elon Musk has just backed Dogecoin over Bitcoin. Another news event has just happened, and now some changes have happened. So pause the video now, make a decision on what you want to do, write down how much your currencies are worth, and let's move forward. Okay, last few coming in, but there's rumors of Dogecoin hacking that's scaring the investors. So things are not looking so good in the crypto world in this simulation. What are you going to be doing? So pause the video, calculate your things. When you're ready, let's move forward. All right, Amazon and Ethereum have struck a deal, but it fell through. So everything in the crypto world is not looking so good right now. What will you do? And this simulation is taking a dark turn. Pause your video. When you're ready, let's move forward. Okay, last couple of things coming in, and another competitor has just emerged to combat Solana and Cardano. So those two are on the way down. What are you going to do? Okay, pause your video. When you're ready, let's move forward. And this is the final slide of the activity. And in this news flash, all crypto has just undergone some heavy regulation. So everything is down, but these are the final figures of our simulation. Okay, so as I mentioned earlier, you've hopefully tracked what's happened with your money. So how much is your initial £100 investment worth now? Okay, what is it worth now? So if I had originally bought 2 Cardano, right, it was £50 when I started. And so if I bought 2 of those, spending my £100, in total right now, each Cardano is worth £170. So I would have £340 at the end if I withdraw. So my £100 would have been turned into £340, which is great. However, if I had bought 1 Solana, which was £100 at that time, my £100 would now be worth only £30. Okay, so what is it for you? Let us know on LinkedIn, by the way. Search up Wise Up Financial Education. Let us know what your new values are, because we'd be interested to know how you found the simulation. So let us know. But hopefully that gave you a flavor of understanding how volatile the market can be and how uncertain you are and how little control you have over how your crypto behaves, whether it goes up, down, or stays the same, and how external factors outside of your control can completely affect what happens to your money. But in case you aren't clear, let's talk about some of the risks of cryptocurrencies. First of all, to recap what I mentioned earlier, there's no central regulation. Because the banks aren't controlling anything and the government isn't there to control and regulate anything yet in the real world, there's no real control over what happens to your cryptocurrencies. So the amount of money that you invest is fully at risk. And because there's no regulation, it can completely go to zero. So that's the two biggest risks that exist. But the other two risks on the right there is one is it's not very well understood. The whole cryptocurrency world is now coming to the mainstream, but it's so in its infancy that there's a lot of scams that's potentially happening. So where there's opportunity, there are people trying to take advantage in a wrong way. So right now, because so many people are so new to the crypto world and don't understand it very well, you can be open to a lot of scams. So if you choose to ever jump into the crypto world or dabble, you need to be very aware of what can be a scam. Okay, and another one is a risk of pump and dump. It's called in the industry. It's the example that happened with Solana in our simulation. The best way to explain this is with an example of how it happened in real life. Dogecoin, which is a real coin, Elon Musk really did say at some point that he's backing Dogecoin, right? And so it 10x'd in value. As you can see from the first two graphs there on the left and the middle, on the 9th of April in 2021, it was worth 0.046 pounds. And literally about a month later, just under a month later, after Elon Musk had tweeted that, it went up 10 times in value. So it became 0.46 per Dogecoin. So imagine if you had 1,000 of them, how it can change, right? Just like how quickly it went up, what happened was people saw that there wasn't actual value behind it. And whoever had pumped it up, not necessarily saying as Elon Musk or other investors did it in a malicioustic way, but when it did happen, the actual value of Dogecoin dropped 8 times over time because there was a lack of trust and there was no utility behind it. So as you can see in the graphs in the middle on the right side ones, from May in 2021 to August in 2022, so just over a year, it literally went back almost to what it was previously. So if you were potentially unlucky and you bought at the top at 0.46 in May 2021, thinking it's going to go up more, and you didn't sell it at that point, you've potentially lost all the money or most of the money that you had in there. You have to be careful of how this pump and dump can massively affect what you're investing into. Another example of not the pump and dump, but how volatile the whole market can be is a Bitcoin example. Bitcoin, as I said, is the oldest one and the one that's assumed to be the almost the equivalent of the gold standard within normal traditional markets. And still, it can have massive fluctuations. So as you see in the graph over there, it went from 48,000 pounds per Bitcoin. One Bitcoin was worth 48,000 pounds to 15,000 pounds in 6 months. Do you see that? So there was a massive 70% drop in value in just 6 months. No one would have seen that coming. And in the traditional markets, that type of fluctuations is very rare because the regulations exist and the markets are a bit more controlled. It can still happen, but in the crypto world, it definitely happens. And it happens very, very often. And it can happen to something that's very established as well. Whereas in traditional world, very established things don't have massive volatility like this. Okay, so hopefully you understand that the risk of cryptocurrency is quite high because it's new and it's driven just by supply and demand. But let's talk about some potential benefits of that. Okay, what utility does cryptocurrencies have? Right now, cryptocurrency is utilized in a few different ways, but all digital. Okay, let's make that clear. Nothing in the real world can be bought or sold using cryptocurrencies yet. Tesla and a couple of other companies tried to incorporate cryptocurrency as a real currency that they can buy and sell their products with, but that has since been revoked. And at the time of this filming of the presentation, there is no real world utility, but there is digital world utility. So let me give you that examples. Firstly, there's the metaverse. And the simplest way to understand the metaverse is just a digital representation of real life that people have made. You have a character in the metaverse, you can have a house, building, everything else you can imagine in real life, you can build it digitally. And in that metaverse, your currency to trade with is cryptocurrency. You don't use real world money, you use digital money. Another asset here type is NFTs. And if you don't know what NFT is, don't worry, I'll come to that in just a minute. So it's effectively digital art at the moment. And so that you can buy and sell using cryptocurrency. You've got gaming. So a very popular game called Fortnite, I'm sure you're aware, came out recently and it's been massive. And inside that, you can buy different skins or costumes for your characters and abilities. And that you can do using cryptocurrency. There are also multiple mobile games that you can play using cryptocurrency. You can buy and sell different things within the game using crypto. Another example is digital real estate. You can buy and sell buildings, land, houses, all of these things in the metaverse and in digital real estate in different games. And of course, the most notable way of using it digitally is trading. Just like we talked about before, in the real world, there's foreign exchanges where you can trade real world cash for different currency amounts. Just like that, this exists in the crypto world as well. So you can buy and sell, just like we did in our simulation, cryptocurrencies. So that's the utility aspect of that. But let's talk about NFT specifically. Most of you probably have heard of NFT as a term being thrown about in the last year or two because it's really come into the main market as it's being evolved. Here's what an NFT is. A very simplistically, the actual definition of that is non-fungible token. That's what it stands for. And non-fungible just means it can't be changed once it's been made. Okay, and that is the unique ability of having an NFT or a non-fungible token is that it's one of a kind. It is a digital asset that represents real world objects most of the time. So as an example, on the right side here is digital art. This art is a piece of NFT. What makes it unique is that there's a unique digital reference code that cannot be replicated. Okay, so it's a smart contract is what it's called. So effectively, it's a strings of code behind this digital art that makes it unique. So the easiest way to understand this is think about the Mona Lisa. Okay, there's the real Mona Lisa and there's the replica of the Mona Lisas. Okay, the real Mona Lisa is sitting in the Louvre, attracting hundreds of thousands of visitors every day, and the replica is usually sold on the street side. Okay, so even though it looks exactly the same, one has a lot more value because that's the unique one over the others. Just like that, this digital art is unique because of the smart contract that sits behind it. And so it's not the same as just having a picture, just like I have in this presentation. Okay, I don't own it. But here's a key difference in where NFT has utility and has brought some sort of utility into the crypto community. Imagine this art, the actual art, in real life art that you make. Okay, if you make a piece of art and you sell it to your friend, great, you've got some money for it. Now, if your friend sells it on to their friend, they get money, you do not, right? You don't benefit as a creator from the secondary transactions that happen. However, in the crypto world, if you created an NFT and you sold it to a friend, you've now benefited monetarily. That friend sells it to their friend, they get the money, and you get a small share. So, as the original creator, you still get monetary benefits from any secondary transactions and sales that happen for your digital art. Okay, that is the primary differentiator of NFTs and why it's being so attractive, because it's so one of a kind and it shares value between creators and traders. So it brings some sort of utility to the crypto world. I'll show you a couple of other examples of how NFTs are being utilized right now when we come to the future of NFTs. But right now, because it's also art based and collector based, it's used basically as a flex, okay? Basically to just show off. And so that's how it's used. Let me illustrate how it's being used to show off with an activity. I'll show you a picture. You have to guess how much is being sold for. Now, don't cheat and fast forward the video. Actually, pause it and guess a figure, a money amount of how much is being bought for or sold for, and we'll see if you got it right or wrong. Again, message us on LinkedIn to let us know how many of these you got correct. Okay, first one. How much do you think this picture here, or this NFT, was sold for? This is called Alien CryptoPunk, and it was sold for $11.75 million. That's right, you heard it correctly and you read it correctly. It was $11.75 million. Okay, now that you have an understanding of the magnitude of the figures we're talking about, let's look at the next one. Pause the video, take a little guess. How much do you think this one was sold for? It was another CryptoPunk, and it was $23.7 million. And the next one here, this is a clock called 1035. How much do you think this was sold for? And no, it does not animate or move. It's just an image. This was sold for $52.7 million. Okay, next one here called First 5,000 Days. There's 5,000 images collaged into one image. It was worth $69.3 million. And finally, we've got this one, obviously the most expensive, and this is called The Merge. It was sold for $91.8 million. So let that sink in for a minute. These are massive, massive, unimaginable amounts of money being spent on digital art. And that's why I mean, currently, it's a means for a lot of people to just show off. Remember, these are also the most expensive ever sold, right? There are very cheap ones that exist as well and everything in between. But this is the sort of amounts of value that we're talking about that might exist in the world, and it needs to go somewhere. And people don't want to just keep it in this just digital art format, and that's why they are introducing utility and real world utility to most of the NFTs factors. And we'll talk about that just now. So what is the future of crypto and NFTs? Because it can't just live as a digital art collection, right? Not enough people are going to be making it a real thing. And the actual attraction of it is the technology behind it and not just the art itself. So what we have to understand is cryptocurrencies and NFTs are really in their infancy. They're just being born into the mainstream markets now. So imagine Facebook when it was first created, or Instagram or Snapchat when it was first created. It was very, very new to the market. That's the stage this is in, except the technology is so much more impressive than what any of us understand right now. So as an example, smart contracts, as I mentioned, they are non-replicable contracts that are stored on the blockchain as an entry that cannot be erased, right? So they will exist. So they can theoretically replace all current contracts, like mortgages, loans, and any other contracts that you sign. Most events and concerts could be NFTs. That already has started to exist right now. People are using NFTs as a ticket to enter different concerts. So holders of certain art can have different privileges. As an example, right now, H&M has a metaverse store that you can enter into if you hold some of their NFTs, right? You can go into the metaverse store and certain assets or certain clothing or whatever is discounted to you. There's a company called VFriends that's currently aiming to recreate the childhood cartoons that we all know, and those are being sold as NFTs. Holders of those NFTs, those digital art, are being invited to exclusive events and many different assets of business that's helping out the business owners and the people who own the NFT. Equally, there's an NFT project called the Flyfish Club, which is also a restaurant in New York City. And so only the holders of that NFT, of the Flyfish Club NFT, can go and eat in the restaurant. They can go and eat in the restaurant for free because they own the NFT. but they've spent the money for the NFT. So as you understand, right now, these are some of the more transactional and small ways that NFTs and smart contracts are being utilized. But this type of technology is way more impressive than the collectability of it right now. But let's quickly touch about blockchain before we finish off, okay? Because all of this wouldn't be possible without it. So blockchain, the easiest way for me to explain it to you is it's just blocks of data that's connected in a chain. Okay, the way to imagine it is imagine there's a simple block that holds all of the data that you've ever created. And just like that, there are multiple different blocks of all the data anybody's ever created that exists on the internet, and they can all be connected in a chain, which means that the access rate of any data is really, really quick and easy. They all speak to each other, makes it really easy. And here's a really complicated sentence structure for you. It's decentralized ledger of all transactions across P2P network. Let me break it down. A decentralized ledger, just like I told you at the very start, it's a book of records of transactions, of data, of things that change. And they all talk to each other. So you can't hide the transactions that you're making. P2P stands for peer to peer. So, where in this blockchain world, everybody's called a friend. So, you don't have to go through a bank. So, for example, right now, if you want to transfer £50 to your friend from your bank account, you have to log into the bank account, you have to transfer it to them, and they will transfer it over, and you don't really have any control over that, right? But in the crypto world, if you want to transfer £50 over, you can just do it directly without any central bank having access to your money. So it's a direct peer-to-peer transaction. That's basically what it means. And so theoretically, any proof of purchase or transfer is tracked and stored. Like I said, your friend is not going to be able to say you never sent them the money because this is tracked and stored. And there are anonymity factors that actually make it safe for you to utilize in this kind of data to be stored on the internet or on the blockchain rather. So your data is not suddenly exposed to the rest of the world. So even though all of the things are tracked and stored, they're not tracked against your name or your details. So no one can just find you suddenly. And as I said, everything here is in its infancy. Okay, so the use cases that can exist is infinitely broad. The biggest next step that's coming through is called Web3. Easiest way to make you understand what Web3 is: Web 1 is emails, Web 2 is social media, Web 3 is immersive NFTs, metaverse, that sort of stuff. That's the new technology that's coming out, and that's probably the most impressive aspect of all of this is the technology that is changing. But here's how we need to keep this in mind. Okay, right now you're the car and you are probably in the prerequisite stage of the whole thing. So while all this technology and blockchain is really impressive, if you ever want to get involved in this space, you need to just think about how you're going to get involved, because crypto and NFTs are unregulated. Okay, which means that all of this investment and strategies are all ultra high risk on the right side over there. Hopefully this slide is not new to you because you've seen it in some of our other presentations that we've done. But effectively, it shows you that you need to clear away any debt and get a lot of understanding and knowledge before you ever start on this investing journey. And so as you see on the right side, cryptos, NFTs, metaverse, all the other fads are in the unregulated and ultra high risk zone. So you have to be prepared. How do you prepare? I'm glad you asked, because I want to leave you with the top tips if you want to ever get involved. Remember, it's super high risk, okay? So you need to research and research some more. I've given you a lot of detail in this presentation. Hopefully you found it valuable and you have a better understanding of the basic principles of cryptocurrencies and NFTs and blockchain. But of course, there's a whole wealth of data underneath all of this that you need to be aware of before you can actually jump in and start utilizing or trading any of this. So you need to research. If you're interested in this stuff, then learn about it and then potentially open up a dummy account to trade so you see how volatile the market is. An example is an app called eToro. There's also a website. You can Google it. It will give you a dummy account to trade the currency without actually using any of your own money. So you don't lose anything, but you understand how the market works. Okay. And if you ever do decide to use your real money towards it, Remember that there's no regulation and the Financial Conduct Authority is not there to support you, so your money is 100% at risk. And you need to pick a safe exchange. Like I said, exchanges are like banks. I gave you a couple of examples at the start, but Coinbase is the most popular within the UK. And if you do decide to invest into crypto or NFTs, then you have to only invest what you're prepared to lose. So if £100 is too much, then don't invest £100. Okay. You have to start small, and that's the only way to do it. And never trade with credit or borrowed money, especially when you don't understand it. So even when you understand it, you shouldn't do it, but especially when you don't understand it, do not do it. Did I mention research? I hopefully mentioned research enough times that after this, it's piqued your curiosity to go and do some research beyond these things. The thing is, right now, all of this is in its infancy, but the technology aspect of cryptocurrencies, of NFTs, and of blockchain and Web3, those four things, is going to be the future within your lifetimes. So definitely go ahead, and if you are interested in these things, do some more research into it, because that will come into a much bigger play as you enter the working world. And thank you very much for watching this presentation. I hope you found this valuable. I hope you've learned the basics of cryptocurrencies, NFTs, and blockchain and some Web3. But if you're curious about it, I urge you to go research more into it. And if you need some more resources, then you can download the slides, you can watch the videos, other modules at wiseupfinancialeducation.co.uk. And please do reach out to us on LinkedIn if you have any questions, and let us know the answers to the questions that we asked about earlier. How much money did you end up with in your investment game? And how close were you at the guessing game of the amount of money the NFTs cost? So if you have any questions or want to respond to those things, let us know on LinkedIn at Wise Up Financial Education. I hope you enjoyed the session today. And if you want to watch other modules, then please go check them out and have a great day.